Hey guys, it's Will here. I want to go through the markets again and some sectors that are doing well and just sort of some things to look for when you're looking at the markets. A kind of macro is really important right now, like 10-year yield and US dollar and stuff like that. So we need to kind of be conscious of what those are doing. The bond market in particular is kind of, the smart money, so to speak. So you want to watch that and see what's going on. So what I usually do is I look at start out with the indices, the major indices. And the question is should you get in at a certain point? So there's different ways to look at it in terms of technical analysis, but one of the ways is you want to see rising bottoms. So this is every time you have this pullback, the low point here is high, this one's higher than that one. That would be a little later in the game. And then you could also wait for a break of the previous high. But then you can see how you don't have a lot of room left at that point. Some people try to get right after like an up day, and that's kind of early. There's also this green volatility stop. When it switches to that, that kind of indicates a shift. Whereas the first couple of up days aren't really, significant enough. And you can get various scenarios like this where you get a little bit of a rally going and then it pulls back. You can't always avoid those, but if you look down here, we never really got above the MACD crossover, price percent oscillator. And also in this, when you go up like this and you have this couple of red dots here below the AEMA, if you look down here, you never crossed over. I mean, that's if you want to be really patient and sit there. But you can also buy back in, even if it's a bit higher. You don't know what's going to happen. So like you sell here and then you wait. But sometimes it does reverse right away. And, you can just buy back in. So if you want to be very careful about that. So if we look over here, the interesting thing is we kind of have a double bottom situation, but this was a gap down in the pre-market and then it went up the whole time. So you could consider the low to be here. And so you do have a higher low situation because this is a bit of a quirky thing. And you have this huge up candle, which is a bullish engulfing, and it engulfs, 3 candles, 4 candles previously. So the next day you get profit taking, but you've established that. So that could be an indicator of, a higher low or double bottom, and then, a huge candle that engulfed many previous days. So they're all kind of similar situations. Big, huge up day, which engulfed, 3 candles before it. An upward sloping, and crossover of the price percent oscillator momentum. Green volatility stops. If you look at the S&P, sort of a double bottom situation. If you consider this to be a new low, then it's not, you don't have a higher low yet. So you'd have to wait. See here, like where you come up, pull back, and then you start to go up, you have this kind of higher low situation. Another thing you can do, like I mentioned earlier, is there's so many ways you could set your rules, but wait for a cross and a pullback onto the 50-day. So once you cross the 50 and then pull back and then start to go up, that's where you would get in there. And usually you're going to go from the 50 up to the 200 if the 200 is above. And that coincides with the price percent oscillator moving average crossing the 0 line on the price percent oscillator. So if we look at IWM, we have sort of a triple bottom here in June. It touched that point. And so it's a potential area to get into in terms of a new, it's uptrend. Like I said, it is a double bottom. It's not ideally a higher low per se because of this one candle right here. The other thing that I look at, which is a concern for going long, is, I mentioned at the intro, is the 10 or 20 year. This is a 20-year yield treasury. It's a short. So this goes up when the interest rates go up. Oh yeah, if you want to get TC2000, which is what I'm using, check out the link in the description below. You can get a free trial or $25 off your subscription. A lot of you have taken up that offer, so thanks, and I hope you enjoy this program. And I've got a watch list here, which is the markets, so that's why I'm mentioning TC2000. I've got a bunch of watch lists on tabs here, so there's a lot of information quickly sort of, to switch between one tab and another. There's all sorts of, in the watch list area, you can have your personal watch list, but there's all sorts of built-in watch lists, and these are the quick ones, which is the US stocks, US ETFs. There's pre-market ones that just are moving, like available in the pre-market, Dow Jones 30, S&P 500, NASDAQ. And then you've got a ton of ones, Canadian stocks, industry by sector, preferred stocks. You've got, high caps, unbelievable amount of sector things you could look at. And then on the personal tab, I have my own watch list here. So some people on YouTube, I've got little, like a high growth tech stocks. I've got a watch list for that. Adam Koo is another guy. He kind of does investing like from a value, like a discounted cash flow value. Stocks that are undervalued, mostly tech stocks. But they're like fundamentally based on earnings and profits and stuff like that. And these ones are the high-tech growth stocks. So back to what I was saying, you can see we had this huge run. We're still having this huge run in the interest rates. There's another one. Oops. I'm trying to remember what it is. Yeah, SJB is short yield, so like for shorter term yield. And that is going up as well. Not as cleanly as the longer term ones, and then the other thing is the UUP, which is the dollar index. So US dollar, it's in this huge uptrend. You can see here now, it is extended in my opinion quite a bit, but we just keep going up. And that's usually a difficult scenario for stocks. Before I go to, I'm going to go to TradingView for a second and just show you the, just because I know this offhand, the 10-year yield is at 4.13. So we were kind of hovering around 3.5 and it wasn't breaking that. And then we pulled back and then we've broken above 4 and we're up at 4.1. So that is, even more rising interest rates, which is generally bad for stocks and especially tech stocks. But we're at this point where a lot of things have been sold off so much. So then I go, if things are looking negative, I would go to inverse ETFs. But right now I'm going to look at US sector ETFs, which is another one of my sort of watch list that I've created myself. And that way I can pick sort of the ones that I like in various sectors. So there's different ways you can sort of determine if you want to buy anything in this sector, in this watch list. You can scan it for whatever conditions that you're looking for. One thing I can do is look at if it's above the weekly trend and the daily. So like a really good strong trend is weekly and daily. I can do 30-day performance, so see what's doing well over the last 30 days. So let's look at oil. This is the oil service. So if I turn on the lines, you can see that I drew this line across here. When you break that line and you pull back and then you're supporting it, it's a little congested here with the 200-day and the 50-day, but that's the entry point, can be right here when it starts to break that pullback. But you can see here we have a continuing upsloping crossing of the price percent of the MACD momentum. So that would have been the ideal place to get in. If you buy later in the trend, you're risking a pullback, but you could use the volatility stops, the green dots, as your stop and get in on a trend that's going up. But like I said earlier, the better, like in terms of once it pulls back, is you have a good stop loss area. But the oil is doing really well, and there's XLE and there is XOP for exploration. So they've all kind of crossed and established a new low. You know, they pulled back at the 50 and now they're bouncing off the 50. Natural gas, you know, oil and gas is a bit tricky because you've got a recession coming potentially, which is, you know, technically going to lower gas and oil prices, demand. But on the other hand, the U.S. have reduced their strategic petroleum reserve quite a bit, and with the Russia war, there's issues with delivery of gas and oil, and there's also lack of availability of oil because they've been lowering production because of the climate change and ESG stuff. So there's a chance that oil and gas could go up quite a bit because of these shortcomings, but at the same time, you know, there's a looming recession which could lower demand. So that's where the tricky part comes in. But you can use the charts and just focus on that. You can see we've crossed this little downtrend high, you know, downtrend line here, and now we've poked out above it. And that's in the pre-market. Another feature of TC2000 is you can see it says 756. I can see the pre-market, and you might want to buy stuff in the pre-market. Since I've sorted by 30-day, gasoline is pulling back, and you wait for a little bit of a green volatility stop. As soon as that happens, you know, you could get in. It's supported right at the 50 now, so that's a good entry point. This is an ETF I just added. It's an index strategy. You can take a look at KMLM ETF and put holdings or whatever, or see what the strategy is. But basically, they do a lot of what do they call it? They do like options and things like that to get more gains, like to hedge things and stuff like that. So you might want to check that out because it has a pretty good performance. Brazil, it's got higher lows, you can see here. There's one here, there's one here. And we're supporting at the 50. This is a good entry point, you know, in my opinion, for like ideally, obviously, a bit earlier than that right here, but that's the potential. You could, if you look at 5-day, which is more recent, you might get a few different things in here. Boat. So you can see we crossed this downtrend here, and that could be a good entry. Of course, you're below the 50 and there's resistance and all that, but you're starting to establish higher lows here. Airlines have been reporting good earnings and stuff like that. So you see we have higher lows and we're close to the 50. If you want to wait for a cross of the 50 and then a pullback, because here you see we crossed, but now it's going, this is a nice upsloping momentum, but you know, that's just right at the 50. So I think I would wait just a little bit longer, but defense, you know, has potential just because of what's going on. Same sort of thing right at the 50, which is not ideal, but we have higher lows here. Lots of resistance in the back from previous trading. I think that's all I'm going to talk about in this video. So if you haven't picked up TC2000, make sure you go on the link in the description of the video below and get the free trial or $25 off your subscription. I've got the gold plan and I've got US real-time data, so I get real-time data of the stock data for US markets. I don't have to, there's no delay, like 15-minute delay. So that's about it. Good luck, and we'll talk to you in the next video.